Mapleleaf Energy Income Funds are exclusive energy sector investments that provide investors with regular monthly income, up to a 100% tax deduction, liquidity, and the opportunity to convert income into capital gains. Joining us today is Shane Doyle, President of the General Partner of Mapleleaf Energy Income, and Joe Durante, CEO of Mapleleaf Energy Income and Sprott Toscana. Shane, can you please tell us what the Mapleleaf Energy Income investment is, and what are the top benefits of such an investment?
The Mapleleaf Energy Income investment is a direct investment into oil and gas production. It provides three unique benefits. One, very strong income paid on a monthly basis. Two, the opportunity for capital appreciation. And three, it is 100% tax deductible, which makes it the most unique product in the Canadian marketplace today.
Can you please explain why an investor would consider working interests and royalties as opposed to other ways of investing in oil and gas?
If you own a working interest or a royalty on a development well, you actually own the commodity directly. If you own another investment, you typically take on market risk or you take on direct company risk. Here, all you're taking on is the commodity risk itself, and we think owning the commodity is the most favorable way to invest in the commodity space today.
Can you explain what development drilling means and how it differs from traditional oil exploration drilling?
By definition, development drilling means the development of an existing property that basically has been found. So it's basically advancing the production from a proved field. Exploration, by definition, means trying to find those resources before you can develop it. Exploration is more risky. The chance of success is less. This shift from exploration to development drilling has really resulted in two major issues. Firstly, it's reduced the risk in producing oil and gas reserves, whether it's in Canada or United States. The resources in place, and through these horizontal drilling and fracking techniques, we're able to bring these resources into production. However, the cost of bringing those resources to production is very expensive. The average well in the Cardium Formation to drill is between $3 and $4 million. Previously, when they were drilling wells vertically there, they were about $800,000. So while we've reduced the risk, we've increased the capital cost. And that's why there's an opportunity for our joint venture program to invest along with these companies to bring these expensive reserves into production.
Joe, as fund manager, can you please tell us what you look for when selecting oil and gas assets for Mapleleaf Energy Income?
Well, we look at three major things when we look at companies that we participate with. Firstly, they need to have very good operational expertise. Secondly, they need to have operational experience and expertise in the areas that they're drilling. And thirdly, they need to take a significant piece of the joint venture so that they have a vested interest in the success and the outcome of that program.
How much access does Mapleleaf have to working interests and royalties?
Well, the partners of Toscana have been involved in the energy sector since the early 1990s. And through their careers as bankers or engineers, they've created a lot of contacts. We've got contacts in the investment banking world, in the commercial banking world, and then of course our personal contacts. Calgary is a pretty small place, so you get to know everyone. We recently merged our operations with Sprott Inc. out of Toronto. They liked our platform in Calgary because we're a pretty good window with respect to the energy sector. We provide other products to various investors, and the joint venture program that we offer now through the Mapleleaf is a great complement to that platform.
Can you please tell us what the expected investment mix will be for the Mapleleaf 2012-2 Energy Income Limited Partnership?
The partnership is focusing on oil wells, and that reflects the current activity in the patch. The gas that we get in the mix comes from solution gas, which is just an offshoot of the oil wells that we're drilling. So basically, we're targeting 100% oil in our program.
How does Mapleleaf Energy Income provide liquidity for investors?
Well, the LP holders will get a tax-deferred rollover into Toscana Energy Income Corporation. The ticker for that is TEC, and it will trade on the venture exchange. That company should be trading mid-October of 2012. It's had a very good track record previously as a private company. It paid $1.30 a share in dividends in 2011 on a $10 share, and it paid 80 cents at the end of June based on that $10 share.
What level of return does Maple Leaf Energy Income Programs target for investors?
We're targeting a 12% rate of return to our investors. And that rate of return is generated from our economic assessment and engineering assessment on the wells that we are planning to drill.
Shane, can you please tell us what tax benefits are associated with an investment in Maple Leaf Energy Income?
Maple Leaf is a 100% tax-deductible investment. But instead of using Canadian exploration expense, Maple Leaf uses Canadian development expense. It is not a 100% tax deduction the year you purchase it like traditional flow-through. Rather, it is a 100% tax deduction over 5 years using a 30% declining basis to accrue your tax deduction. It is a much better risk-managed way to accrue tax deduction than exploration from our perspective.
Joe, can you please tell us a bit about the past Maple Leaf Energy Income offerings and how they've performed?
Well, both funds are performing quite well. The 2011 fund that we raised approximately $16 million from participated in 12 joint venture opportunities. 11 of those are oil wells, and the 12th one was a gas well. The production from those wells are currently about 1,000 barrels a day and about 10 million a day of gas. And they're meeting and exceeding our expectations. The 2012 fund, we raised approximately $18 million in that fund. We've placed $12 million with a company called Bellatrix. We've entered into a 6-well program with them. 4 of those wells have been drilled, and those wells look as good as the previous wells that we drilled in 2011.
What is the current outlook for oil and gas, and why is it an attractive time to invest in oil and gas companies?
Our outlook for oil and gas remains quite positive. We see oil remaining at these levels for the foreseeable future as a result of the underlying cost of the supply of that crude. Natural gas, we've had an oversupply for a significant period of time, and now with the erosion in drilling and the increase in demand for natural gas, we see that price increasing in the foreseeable future.
What type of investor would be ideal for Maple Leaf Energy Income Programs?
The ideal investor for the Maple Leaf Energy Income Programs are those investors who are looking for monthly income, and also those investors who are looking to invest in the energy space, particularly oil, and last but not least, those investors who are looking for a 100% tax deduction on their investment.